Good morning, traders, and welcome to Tuesday, June the 28th. This is the morning update brought to you by Mark Owen from Phoenix Blue. Well, first of all, I'd like to thank all of those that actually emailed in thanking Tom Colley for his brilliant update yesterday morning. Very informative and look at different ways we can be looking and perceiving the news and then relaying it against the charts. Now, obviously, there's not a lot I'm going to add to that because it'll be rather repetitive, and we are keeping it morning update. So if you do have further questions about what was informed to you yesterday and what is informed to you over coming weeks, please keep the emails coming in or ask questions on the YouTube channel. Send us tweets, send us Instagram messages. We're happy to have dialogue with you. So we always like to know that people are watching, people are listening, and that they're finding the information useful. Okay, so it has been a crazy few days in the market since Brexit occurred. Now, what's happening today? Well, believe it or not, it's the first day of the EU Economic Summit. So Mr. Draghi will be speaking, and we can only imagine what the major talking point is going to be there, can't we? Yes, Brexit, how it's going to affect England, how it's going to affect Scotland, how it's going to affect the European Union, trade deals, immigration, currency values. I mean, it's just going to be ongoing. And because of this, we have to just remember, look, we're 6 months into the year. There's another 6 months to go. We're coming up to what is summer season, and for me, it's also what I call the worst time to be trading. A lot of false signals, and although I would rule out trading completely, it's such law that there'll be a fantastic trade setup. So my rule of thumb is throughout the summer months and December, I trade at very reduced risk. Reason why, like I said, we have lower liquidity, false signals, but it's also through these lower illiquid months, what you can find is it can also be the start of new trends. So this is something we have to be very focused on. We understand where these new trends might come about, and we can potentially spot where the new trend is coming via our analysis of the Commitment of Traders. Now, if you don't know anything about Commitment of Traders report and how that can benefit you as a trader, well then, one thing that you need to do is either look it up, or number two is get in touch with us and see how we actually use this information. And then second high important news we've got today is the US consumer confidence. Now, because of what's happened over the last week, safe havens are rallying, we've got dollar strength in the market. So again, any sort of dollar news is going to be taken by the market of great interest. So we'll be looking to see what happens there today. However, what I will be saying is that I am not trading FX, okay? I need the dust to settle. I want to see that we see some sort of normality or some sort of regular, although the markets haven't been that normal, you could say, this year, looking at some stability. And we don't want to see these huge wild swings. Wild swings, yeah, okay, some people might benefit from it. One of my good friends, he made an astronomical amount of money during Brexit buying gold, and he took out 1.7 million on the day. But hey, those people that trade it, fantastic. Well done to them. Myself, I sat on the sidelines. I'm sure you'll hear plenty of wonder stories, and I'm sure you'll hear plenty of huge losses as well from people that got caught on the wrong side. So for me, I'd rather sit on the sidelines, wait for another day. Okay, right, let's have a look at the Nikkei. Well, the Nikkei, what we can see here is we've been highlighting this triangle that was formed over, 6 months period, and we saw a huge breakout below. It came back to potentially retest. Now look what happened on the huge sell-off day. Look where it came back to test. It came back to test 2015 year lows. We followed this with an inside day yesterday, and then today what we've seen is we've got an engulfing candle, but it's going to be interesting to see where it actually finishes. So if it finishes above the high, then that's obviously a bullish sentiment for where we are. What I would personally be looking for is, because I do have an investment term strategy that Tom mentioned yesterday, and this will obviously see the Nikkei rally somewhat. So I am bullish the Nikkei somewhat, but I think that's more on the basis that what we're going to see is we're going to see long-term intervention coming from the Bank of Japan, and we'll be looking at buying the dollar yen, for example, selling yen, buying US dollars in and around the 100 with stops sort of anywhere in the region 98s to 98.50s. So it's going to be a sizable stop, and we'll look to add into that position if it does come back down anywhere between 100 and 99s. We'll look to build a decent sized position if possible. Obviously keeping within our risk parameters for our portfolio. So the initial entry will be a small entry, just looking to basically take a position within that market. So if we are right about what we're thinking, we should then see considerable upside to the Nikkei. Okay, so the dollar index, we can see that with the move from last week, and then we see it continued Friday, yesterday. We've seen a break above the 96 area. Now, I want to see a clear break above this. Yeah, we got our break out of the channel, the 95. That's what we're looking for. But obviously, Brexit, this is very exaggerated. So for me, what I'm looking for is I want to see a higher high, higher close above 96. If we see that, then I'll be looking in around the 96, 96.25 area to be getting long dollars, and we'll be looking at the majors to trade that against. If this just comes straight back down into this zone, I'm still staying away from currency. Okay, so I want to see a continued move to the upside. When we see that, then I'll be looking for some retracements to get back in on this particular market. So dollar yen. Now, if we look from 2015 highs, all the way down to 2012 lows, we've got 50% retracement fib level in here, and then if we match that up with what we can see as structure here, so we can see resistance, breakthrough, support, and then the market didn't actually test it for the best part of a year until we had the news last week, and it came straight down, came into it, bust straight through it, but then it's rejected it. So what we're looking for is we're looking to see the market potentially test this zone again. Okay, so we're looking for it to come into the 100s, potentially even 99s, and then we're going to have end of year target of 120s with a 12-month forecast of anywhere between 140 to 170. Okay, but in order for that to happen, the Bank of Japan are going to have to intervene, or we'll watch their current account start to reduce. Okay, so the talk of the moment is cable. Now, there's not a great deal we can actually find with this chart. I mean, the only thing that I'm looking at, this is a weekly chart, and I've gone back to 2002, and all I can see is very clear touch on the tip of this wick here, and we can see right now this week's candle is sat on this support level. Now the question is, what's going to happen? Is it going to break through? Is it going to bounce? How much of the central bank is going to intervene to prop the currency up? Are they going to manipulate interest rates? Are they going to do quantitative easing? We don't know. So trading this market right now really is a gamble. So anyone that is trading it, good luck to you. I hope you're making money. But if you do come unstuck and take a big hit, just remember that we have warned you that right now it's something to be avoided. So the S&P 500, this is a market that we did sell multiple times up and around the 2100s. Unfortunately, we didn't catch this last move due to bullish sentiment. We just didn't want to get spiked around the Brexit vote because all the markets were rallying into the vote. Obviously, the sentiment was there, and it wasn't worth taking the risk on, even though it did come up to where we were looking to get short again, which was in and around the 2120, 2100 area. The weekly shooting star here did give a lovely signal, which some of our traders took, but unfortunately was stopped at break even on this move here. So how can we look at trading it right now? Now, unfortunately, there's the sentiment of a lot of traders are that they don't actually like to short the stock markets. They only ever like to buy them, and they only ever like to buy equities. Well, if that's in your rule plan, then obviously, or trading plan, I should say, then that's what you need to do. However, I'm a man that will trade anything that I see that meets my technical stroke fundamental setup. So right now, we've got two key areas that I think we can trade this particular market. So 2040 shows a beautiful level on the daily chart where we can look for any sort of retracement into 2040 and take first profits in and around the 2000. Now, price is in and around the 2000 now, so what we've got to watch for is either a price rally up into 2040 to get short, or if we're going to see a clear close below, say 1990, 1980, in and around that. If we get close below, and then we'll look for a rally back up into the 2000, and then we'll target the high 1800s as a first target, and then look to maybe run it down to 1820, where this red line is here. If we get a break below that, then well, it's obviously recession time. But what I think we'll see is we'll see the markets prop up these levels here. Okay, gold. Well, lovely chart here. Safe haven buying time. So how can we look at potentially trading this market? Well, we've got this long-term trend line here on the weekly chart, which we can see gold has respected. I've put in a couple of levels for you to look at as potential buying opportunities. The first one, the most aggressive at 1300, yeah, it's the big round number, and we can see a couple of tests of structure right back here. So if you are going to trade and look at getting long from here, make sure you're looking at time frames, see if you can see any change in cyclicity or price action in and around this level. Now, my preferred sort of buying areas would be in and around the 61.8 at this whole move, or the 50%, which would be around 1240 or $1,200. And I'd be looking to hold those and build a position, and we'd be looking to see. We do think it's going to be a risk-off year, i.e. gold going to rally, so we could see this market really break through up into the 1500s, maybe even higher. Once we've got a clear close above and higher high through this trend line, so we're looking for a close above, then a higher high, higher close on the next candle. If we see that, we've got free room. Well, you can see it yourself. There's a long way to go. Maybe 1560, this structure level here, it'll be the next sort of stop. So if we can get in around the 1300s or 1240s, gives us a nice long-term view on gold. Next chart we're going to look at is a trade we're already in, which is corn, and we're looking to add back into this market. So we're already at break even. We're looking to add back in around the big number 400 here. We'll look to add back in, stop somewhere in around 408, and then we'll look to target same as our initial trade from up here. Target 360, 355. Okay, just this blue box down here. So initial trade was this shooting star here in at structure. We did have a commitment, a traders report, sell signals, seasonal signals. We got a beautiful move off. First targets hit. Carried on moving down, very nice. Obviously, after a move like this, you do expect some sort of pullback before hopefully a continuation. Okay, so our bias is we're looking for a pullback into around the blue zone and sell off down to these lows here. Okay, final chart of the day. We're looking at crude oil. So we've sent out a lot of trade opportunities looking to get short of this market. We did call 52 as a short. Unfortunately, we didn't make the money we were looking for because we got that huge retracement back up into the 50 zone around the news last week when the markets were looking quite bullish, pending the Brexit vote, only to see it drop 6% on the Leave vote being instigated. So how do we look at trading this right now? Well, it's quite simple. We've got two options. As we have a bias, and our bias to oil right now is to the short side. Now, with us having that bias, that means we've got two options. The first option will be looking to get short in and around somewhere around 50 to 51 and get your stops somewhere above these highs here. First target's got to be 46, 46.20, and then looking to run them down. A second target anywhere in between sort of 42 and 38. This will be trader's own choice. So we'll be looking to get short here. Or second option will be a break and close below 46, then for a retest and trade it down to 42. So we'll be looking for about a minimum of $4 gain from the 46 trade, and then potential extended targets to around 39. Okay, that's it for this morning's morning update. Just remember, guys, those that haven't yet registered, we've got a trading session with Phoenix Blue on July the 19th. If it's something you'd like to attend, please drop us an email at info@phoenixblue.co.uk with July the 19th trading day in the subject line. We'll look to reserve you a seat. It is limited availability, so if you do not get an email back confirming your reservation, that means what we'll have to do is we'll have to put you on the list for cancellations. If there isn't any room on the cancellations, what we'll do is we'll forward your request onto August trading day. We will send you emails about that as well. If you've got any questions about today's content, please drop us an email. Alternatively, if you've got any questions about Phoenix Blue services, how we can help you and take your trading to the next level, again, either drop us an email, pop into the office and see us, or give us a call. We're more than happy to talk with anyone about all different levels, taking you from novice trader or experienced trader with not the results you're looking for. We work with all types of traders. So that's it for today, guys. Stay disciplined. Have a really, really good trading day. Even if that means you aren't trading, make sure you're doing something useful. Review, back test, whatever it may be. Okay, we'll speak to you tomorrow. Bye bye. Thanks, guys.